Welcome to our little afternoon update where we're going to go into and get you guys some daily expected moves for October 8th. But today we were able to close pretty much spot on to that daily expected move. We were able to confirm some critical signals that we've been discussing, and we're going to discuss them further today. And we're going to get you guys those updated daily expected move for the SPY and the Qs. We're going to go over volatility, and we're going to pop over into maybe a couple of these stocks. I think I wanted to at least look at Tesla, so we might go look at that. But the critical thing here is we do have those daily signals, right? We have those daily signals, and we had the trap number 1 show its little face here. We had the bull trap number 2 show its face, and thank goodness to the Qs, thank God to the Qs, which told us to watch out for a trap number 3, and that's fantastic. And we're starting to see what? The confirmations that say, hey, trap number 3 could be pretty much confirmed at this point. Now, I wanted to discuss how you can call this an actual top. What I believe when you could actually call this a top is actually when you take out this low. I think if you want to just a discussion on the whole top conversation, if you really want to discuss, hey, is this a top? Well, you have to take out that low, most likely see a bounce and see that lower high come in. Now, I like to bet money on divergences and things like that. You can bet on this, but I'm just talking about like actually calling it a top at this point. Now, for the time being, though, we have to go through these signals, right? Why could this be a top right now, even though we might need to actually see it prove itself as a top? Well, we saw that there's MACD divergence, there's triple divergence on your MACD. We saw that there's triple divergence on your RSI at the same time. So this is pretty simple. Those are weakness and momentum signals, and when they confirm and something bad happens during a bull run, you can see something surprising. And if you match that with certain things like volatility, with the dollar turning around, with the Q, maybe we'll pop into the dollar for a sec, with the Qs showing similar signals, with DIA, IWM showing similar signals. We just got the rate cut, like people are worried about recession. When you mix all these things together, you go, man, some people who are really bullish, and they've probably been bullish for, what, a very long time, right? A very, very long time, ever since we called that bottom with the 2-hour higher low. Very, very nice, our scenario number 1. Yeah, those people could be a little bit FOMO'd or thinking that nothing bad can happen. And that's exactly when you're the most vulnerable. So very nice for the daily expected moves to be 673.30. Very nice for 664.94, because that means that this is spreading out, meaning that today, as we landed on that move, we have higher implied volatility going into tomorrow. So 2 things that we need to be aware of here. The fact that these things are confirmed, it means you are highly likely to curl down the daily chart at this point. You do have a good probability for that. Now, I wanted to discuss the distance between the center line for the MACD. Yes, I'm getting very trying to be extensive in this video to give you guys as much information as possible, but implied volatility is slowly picking up. Volatility, if you notice on the right side here, is creeping up towards 20. This is why I'm going to go in depth with the SPY over the next few sessions. And when that volatility really picks up, a lot of traders struggle, especially retail. They make the wrong decisions at the wrong time. So I am putting up the full technical analysis course just for $100. I'm starting that sale just for this week. And then we're going to start that sale up back towards Black Friday like we normally do for the end of the year. So if you want to grab it this week, just in case, if you're not very good with these high volatility moments, that can happen. If you're not really good in those moments, it would be very, very good for you. And the discount will be up for this week. So something that we're looking for here. The positioning of the MACD. If this is able to curl up at any time, what do? We probably raise the floor, as long as we're not taking out the low first, right? If we do this and we bounce, it's very likely for a lower high. But if we actually come down to this daily expected move, or even come down to this weekly expected move, and we curl up into positive territory, is that a lower low or a higher low? Well, that's a higher low, which means you're very likely to do what? Well, you're very likely to go make a new high. And if you go make a new high, we'll always be looking out for that quadruple divergence. This is where we really want to be paying attention. So what do we look for? We look on the 30-minute chart. The 30-minute chart will be very interesting here because it is negative. This would say, hey, yeah, we're leaning towards, we can see a little reaction up, and we can fail around this point. So really what needs to happen for bulls is they need to see a squeeze, break through, and make a new high out of this little consolidation. Because that's all it really looks like at this point. You have made a semi-new low. You would like to see a lower price point, then keep falling down into these type of areas. So around this weekly expected move, in order to tell if that 2-hour is going to whip back up and we're not going to see the top right now, we will be looking out for 30-minute divergence here. I can tell you right now that I say these type of things and people get really angry because I'm not a fortune teller and I don't know exactly what the market will do the next day. Nobody does, and if you do, you probably have insider information. You know I like to say this. If you have insider information, you know what's happening with the market tomorrow, like exactly what's going to happen. Please tell us, okay? Let's help people out. They need to make money out there. Inflation's still crazy, even though they tell us it's not. So around this area, I'm not leaning towards that. I think that this is pretty much the last leg. This is why I called it trap number 3. I think trap number 3 would be the last leg. But hey, if I have to say trap number 4, I will update you here on Patreon. We can see here that the Qs do have some updated daily expected moves. We see 609.45 to the upside, 599.55 to the downside. The tricky thing here is, if you go over to the SPY, the reason the 30-minute, I'm not trying to read into the price action too much. I'm trying not to read into it too much because the Qs aren't necessarily matching the fact that we actually made a low here for the SPY and a lower low here after making that new high. So we have tried to shift the trend down. The Qs didn't do that, right? We still have that series of higher lows. So we really need to see more price action for this. This means what? The SPY and the Qs, similar standpoint here. If the MACD does curl up and it is able to go positive, which you see how close that MACD is to the center line, you can go up to that daily expected move and you can even go test the high and go make a new one, which means you might see it go up to that weekly expected move. We'll see what happens with it going on the next few sessions. This is pretty much my management for the trade for the short term. If I have really short term options and I'm trying to take some kind of top, right? I'm trying to bet on that. Well, then I would overall say, okay, if this curls up into positive territory, then that trade's just going to go wrong. It's perfectly fine to admit that. Having a plan for if your trade goes wrong is perfectly fine. There are probabilities in the market. There are not absolutes. You do not know the future, so make sure to treat your trades like probabilities, not absolutes. That means have a plan for your trade and make it so you have an edge. That's what we teach in that full technical analysis course. We teach you to look for things that can give you an edge, but at the same time, you have to have a plan for if it goes wrong because nothing in the market is 100%. Literally, a alien ship could come down and beam someone the next day, and you have no idea. It could literally happen. That's a 1% moment right there. So if the 30-minute curls up into positive territory, we can see a new high here, and that's going to be what you want to watch for the management of the trade. But as it stands, MACD divergence looks good, even carrying across for a long time if you really look at this, carrying across. But in the near price action is what we care about. The RSI, you can see in the near price action, boom, 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 divergences are there. So this tells us that the 2-hour chart is very likely to cross. The 2-hour chart does cross, and it confirms what? Thank God for the Qs, okay? Because we set trap number 1. We set trap number 2. And then around here, the Qs were the ones that told us, hey, I don't have divergence or anything, so I need at least a lower high or a divergence. So we immediately put out there, hey, watch out for a trap number 3. We get the 30-minute divergence that we discussed on YouTube. Fantastic. The Qs are doing great for us. And now we just have to see, is this divergence enough? Triple divergence even on the RSI there. Is this enough for the Qs to be able to reverse around, start to curl down daily charts, right? Confirm these divergences in the near price action for the RSI, confirm these divergences on the daily chart across the entire MACD. This is what we're really looking for. We're looking for a top, and this week is a high probability for it. They have leaked out the bullishness as long as they can. They have turned bad news into good news for as long as they can. They have soaked up every piece of money that I physically think they can at this point. And now what's left is you're going to start to see all those dark pool sell orders start to hit the tape while all the retail people start to buy those scraps at the top. And it's going to be FOMO, and FOMO's already hit, especially with this last push. It's going to be rough is what it overall looks like. That is the highest probability thing at this time. And we already discussed if that's going to go wrong, look for the 2-hour chart here. So if we're going to raise the floor here and all of this is going to go wrong and we are going to see that there is more cash, more and more and more cash, we don't need a weekly pullback, Then look at the 2-hour chart. There's space between here and the center line. If the 2-hour is able to come down to this weekly expected move for the Qs and curl up into positive territory, test the high, go make a new one. Why? Well, higher lows, higher lows. This is still a positive trend at that point. And you would say if this curls up into positive territory here, doesn't make a little third divergence on the edge here, we will watch for that, but instead squeezes, then you will have to remake those signals, which means you will have more of a bull cycle, and you're probably heading to the upside monthly expected move, not the downside one. I do apologize if you wanted this to be very clear. I have to give out a lot of information today. I have a lot of notes on what I'm supposed to talk about as far as it goes with how I'm seeing markets, and I want to distribute a lot of that information to you to do the best I can in helping you maybe take a, maybe look at these things and be able to figure out where you want to place some money. As far as it stands, the VIX, let's go into the VIX for a second, because the VIX was looking bad early on in the day. The VIX was not looking good. This 2-hour crossing down relatively close to the center line, it does not say like, oh man, volatility is going to boom here. Then it just rapidly curls up. And you notice this. This is a good thing with volatility, to not trick yourself out. I've traded volatility a ton. Volatility and probably Apple are the two things that I've traded the most. VIX overall, when you create these signals, you will get a lot of wonkiness. The important thing is the fundamentals. Are you getting higher lows? Have you violated those lows? Are you positive on your MACD? Are you crossed up on the center line on the RSI? Yes? Okay, now add the other things to that. We have divergence all across this thing. We have divergence all across this thing. Yes, it's taken its time, but if you are building a position for a long period of time out, or if you are managing risk and repositioning at certain times, volatility can be really, really good to you. Why? Because this signal tells us that the weekly pullback, the weekly retracement is on. And if this is able to confirm at the end of the week, I think you're going to end up with that weekly retracement starting in October. And it might not end until early December, late November at this point, because we have a lot of time and we have a lot of space to really go and readjust. We have a lot of places to pull back down into to find those buyers as well and to shake people out of this market before we boom in 2026. Don't think I'm saying some kind of massive, I mean, if a crash happens, a crash happens. But as of right now, I do see us going up in 2026 after this weekly corrective move of about, I think I said about 7 to 14. I'll say 9 to 14% as far as it stands. Now, I'll just pop into a few because Tesla's a big deal, right? And I think Tesla is about to get at least a retracement in a test of about $400. I think we're about to see that test. Now, why would I be saying that? Well, because if you look at the 2-hour chart here, I really want to show you this, and hopefully you guys are on Patreon or paying attention to this, because this is really, really nice. You see here that we make the divergence points after that absolute tear. And you go, when is this going to pull back? Now, I'm not someone who likes to bet against Tesla personally because of things like this. I just like to watch it. And if it gets a big move, the market usually gets a big move these days. So if we notice here, there is divergence here on the 2-hour. And then what happened? We made the new low. This is very, very good because we discussed this on the SPY and actually on the Qs. We made the new low. You saw us peak our head below this low. That means, oh, lower low. What do? We react back up, we curl up, and then we curl back down. This tells us that this could be that lower high. This tells us the left head and right shoulder that we were discussing on the SPY is actually showing here for Tesla. This means that Tesla is very, very probable to test at least $400. It means that Tesla is going to get its daily pullback. And you have the good confirmation with the price action. You have a good confirmation with the MACD as of right now in pullback mode. I want to be very clear. That is pullback mode. This is not in negative territory. And then you also have that RSI showing you all those divergences saying, hey, we might need to correct for a moment here. So I'm really paying attention to the gap fill around 395, really paying attention to the gap fill around 368. And if we really wanted to, we could come all the way down and gap fill at 338 when it's all said and done. Now, some of the riskier signals that we will want to watch out for for certain stocks like this are going to be weekly ones, right? I don't think you really want weekly charts crossing down right here because this could be double top. So I don't think you really want that at this point. Just wanted to mention that for Tesla. Actually, there's a couple others I will go into. I believe, is it AMC? I don't think it's AMC. I think it's GME. A signal that we overall talked about, and I'm sorry for the kind of unprofessionalism while talking about this one, but yeah, if the daily chart does cross down here, it's not a good sign for AMC. But this is a warning, right? We were warned by what? By GME. We were warned by GME, and I put this out there, and every single time I get people that email me, message me, say that you're just you're a shill, you're this, you're that. Look, GME, it's starting to get to 20. It just broke through $28. How could you say these things? Look, I have to tell it how it is on this channel. Like, I hold a little bit of GME, but at the same time, if I see a 2-hour divergence like this, do you think I'm going to play an option to the upside? No, I'm not going to play an option to the upside if this confirms. You have 2-hour divergence here. You have 2-hour divergence here on the MACD. You have 2-hour divergence on the RSI, triple divergence at that. And all you have to do is lose this low, then you get a reaction up and you get that right shoulder, and then you keep tumbling down. Now, I'm not someone who says like, oh, I hate GME. I just wanted to show this off and show how GME still does react to these type of signals. So pay attention to that. Pay attention to these type of things because GME can be a good opportunity. Now, do we have a chance for this 2-hour to turn around and go positive and squeeze? I think you always do for GME. Do you have 30-minute divergence? You have this tiny one. You probably need more than that. But I just mainly wanted to discuss, hey, the 2-hour divergence, once again, it shows its face. We see a daily pullback. It's just every single time we have seen this 2-hour divergence, I really want to convince people who are still into just trading like GME alone, who are maybe struggling to trade it just like everything else, and you'll be perfectly fine. I can even take you back to 2021. I can even take you back to 2024 and show you signals then. And the confirmations are there. You will see confirmations when these things do turn to the upside. So I wanted to put that out there. GME was a fun one though. So I just wanted to pop over and talk about that anyway, just for funsies. So as we close up here, guys, I just really wanted to put a lot of information out there. I wanted to get a lot of my thoughts, a lot of my theses out there about the market. And overall, I think this is trap number 3, showing the first confirmations. I wanted to show how you could overall call it an actual top, the actual structure you need to see to be like, that is a top. But we see volatility popping. We see volatility almost at 20, and we haven't even seen barely a blip in the SPY. We've seen the SPY confirm the trap number 3 reversal signals. We have seen the dollar start to base out and turn around, like people are about to fly into cash and out of stocks. So there's a lot going on here, and I wanted to get it all and bring it out to your attention. I hope that this is helpful in some way. I really, really do. And it looks like for now, we're just saying, hey, okay, the 2-hour confirmed. We got to see if the daily can confirm next. We're going to be paying attention for bounces around our weekly expected move. But as of right now, you have a 2-hour triple divergence confirmed for your MACD, for your RSI. And so you might want to watch out and make sure that if you've been holding on for this entire run in 2025, it might be a good decision-making opportunity when you do see signals like this. Hey, thank you guys so much for watching this video. I really do appreciate it. You guys are fantastic. I hope that it was in some way helpful to you. I hope that at least maybe you can get some good levels for tomorrow because those levels were so good for today. So once again, those red lines on the chart, they are your daily expected moves. The purple lines are the weekly expected moves, and the yellow lines are your monthly expected moves. You can screenshot this right here. Make sure to join Patreon if you'd like to get a little extra info and get those weekly expected moves and monthly expected moves for these stocks over here. And if you want, the full technical analysis course will be $100 for this week. You won't be able to get that until the Black Friday sale. So thank you guys so much. Have a great rest of your night. Peace out.